Hey guys, it's Justine Lackey from Good Cents Bookkeeping. How are you? I am so excited. I am recording this video from our new Good Cents Bookkeeping headquarters. Space feels a little cavernous. We don't have our rugs and things yet, so maybe my acoustics are a little off. I apologize about that. But something happened yesterday, and I didn't want to wait to make this video until next week or the week after when the space is ready for the grand reveal. So I want to talk about that. And what happened yesterday is our election. And it was magnificent. Democracy is always magnificent when people are engaged in it. And it got me thinking about our government and our three branches of government and our balances of power, or checks and balances. And it's really a beautiful system when it's working well, where one branch can keep an eye on the other branch and keep the powers in check. And it's great. And guess what? In your financial life, there is the same thing. There is the trifecta of financial services, and I want to talk to you about that today. Because just like our US government, this trifecta of financial services has checks and balances involved in it that are really important to keeping your finances safe and sound. And so what are the three prongs of this trifecta? The first is your bookkeeping, the second is your accounting and your tax preparation, and the third is your financial planning. So bookkeeping is something that we do, Good Cents Bookkeeping, myself, Justine Lackey. The second is your accounting and your tax preparation. That's either done by a CPA or somebody who's an EA, which is a designation given by the IRS called an enrolled agent. And the third is your financial planner, and that's the person who helps you achieve long-term financial goals through the use of different various investment tools, whether they're SEP IRAs or stocks or bonds or whatever. And all three of these team members should be working together to help you achieve a strong financial foundation and to achieve your financial goals. And one of the things that I find my clients come to me and say when they first come on is, I don't really understand the difference. Like, what is the difference between a bookkeeper and an accountant? And a bookkeeper, I like to say they're on the trenches, right? They're down in the trenches. We're the people who are adding up all the numbers. We're monitoring all the pennies. We're putting all the things in the right categories using QuickBooks. Typically, we use QuickBooks Online. You know, how much you spent in office supplies or local travel or on legal fees or rent or equipment purchases. All that stuff is really important because it helps you gauge the financial health of your business, to determine your profitability, to see which products are selling the highest, your highest rate of return. And then the accountant takes that information, usually in the form of financial reports, and converts it and puts it into tax software, and that's how your taxes are generated. Your accountant will then work in conjunction with the third prong, your financial planner, because sometimes there's investment tools you can use to help you lower your taxes due or defer taxes or lots of different stuff with taxes and financial planning. That's not my area of expertise, so I'm certainly not giving you advice, but I'm telling you, by employing the accountant and the financial planner in conjunction with the bookkeeper, that's your best strategy for achieving financial success in your small business. There's also something really important I want to share with you. All three of these people should be watching each other. The bookkeeper should be watching the accountant should be watching the bookkeeper, the accountant should be watching the financial advisor, and all three of them should be sort of looking at one another, making sure that everybody's doing their job and everybody knows what they're talking about, because mistakes, they can equal big dollars. And I want to give you an example. First, in my local paper, just recently I saw that a woman was convicted of theft from the company she was working for. She was a bookkeeper. She stole $250,000 over a period of a few years. We just had Mark Anthony. He had millions of dollars stolen from him from basically a bookkeeper at an accounting firm. We know that Joe Piscopo, that happened to him also. I banted back and forth a little bit with him on Twitter about that. And Rihanna made a hit song about, her accountant doing her wrong. And in our firm, one of the most significant stories I can remember like that is I had a client who came to me and said, something just doesn't feel right with this tax return. Can you look at it for me? I said, of course. And I found out that the accountant had eliminated over $25,000 worth of travel expenses. The clerk there had decided some reason these weren't legitimate business expenses. They were. She had traveled all around the world doing public speaking. And when I had the accountant put it back on the tax return, it lowered her tax bill by several $1,000s. It was insane. And had my client not had a bookkeeper to look to ask those questions, she would have never been able to determine that for herself without going to another third party. In the case of thievery, accountants should be looking at that general ledger, watching the bookkeepers, making sure those things can't happen. There's a wonderful article I wrote on thedailyworth.com that you can look at that will help you give you some tips about bookkeepers and thievery and how to protect yourself. I had another client who got really bad advice from a financial advisor. When he left, when his accountant retired, who had referred the financial advisor, he determined that the financial advisor had set up his pension plan incorrectly. And that had all sorts of financial implications. So it's just really important that when you are considering the financial professionals in your life, I definitely don't recommend putting everything under one roof. I know that sounds really exciting in terms of streamlining everything, one bill a month, and you don't have to deal with anything. It's all under one house. It's really not the way to go, because then you have no check and balances. If all of your services are underneath one roof, there's no way for you to check it out. Secondly, make sure you vet people. I always say this: vet, do background checks, get references for these people. Don't just sort of, work with anybody. Make sure that you vet them. And 3, make sure that you're staying present, staying engaged, looking at your financial reports, looking at your tax return, looking at your investments, and being aware. It was just, this was just something, it came up for me, and I just wanted to share about it. It's something that comes up a lot in my business. I have a lot of clients who come to me and say, oh, I just wish I could streamline everything. Justine, can you do taxes? Or I'm like, no, I don't want to do taxes, but I also don't want to do taxes because I don't think that you should have all of your services under one roof. So I thank you for joining me as always. If this video was helpful, please share it. We have some really cool things being posted on the blog lately. We have some upcoming exciting stuff in the pipeline, lessons and things. So thanks again for joining me. Oh, and I'll be back for the big reveal once the office is all finished. Okay, have a great day.